Okay, good morning everyone. It's so great to see so many of you here today for today's discussion on a topic that is very close to home, the Singapore stock market. And if you've been following markets closely, you have realized that Singapore equities delivered a stellar performance last year, delivering total returns of over 28%. And this was driven in part by the set of initiatives launched by the MAS at revitalizing Singapore's equity market. But before we examine these initiatives in greater detail and assess their impact, I think it's helpful to take a step back and consider why the strength of Singapore's stock market matter in the first place. And with that in mind, I'd like to direct my first question to Jeff. So Jeff, how would you describe Singapore's position as a regional and global financial hub? And to what extent does the competitiveness of our stock market influence our standing as a financial center?
Okay, thanks, Joel. Okay, at the moment, Singapore is pretty much in a good place economically. Our growth is at 4.8%. Our NODX is at 4.8%. One sector that has been under the microscope last year is construction. That's growing at 4.9%, has a very strong multiplier effect of 1.9 times through the entire economy, as well as our ICT, business services, financial services, that grew by 4.1%. And of course, Singapore Airlines had a record bumper year. They flew 41 million passengers around. So at the moment, the momentum is there, okay? And the momentum is in both the hard economy sectors as well as the high value added sectors. And this is where Singapore has a lot of structural strengths. We're basically the 15th biggest exporter of merchandise exports across the world, but we're also the 7th biggest exporter of digital services as well as commercial services. And if you look at what's happening to supply chains across the world, they're all being rewired, and the big enabler of that is digitalization. So for many years, we've been on the cutting edge of leading digitalization, whether it's our infrastructure, the digital engagement agreements, or the cloud processes and systems that we've built in this region. For that reason, we have incredible structure that when you look at like the recent Singapore Business Federation review, a lot of companies, despite the global uncertainties, are looking for growth next year. They're looking to expand regionally. They're looking to build their businesses. And that has been, I guess, a key factor as well as to why the Singapore dollar over the past 6 months has seen a lot more talk about its macroeconomic credibility on the global scale. So Singapore, I think, is very much on the forefront of the world's markets at the moment, and it's only logical that we pull out all the stops that we can to support our stock market. Our stock market, STI, had a bumper year last year. If you look at the last 2 years, it's basically generated a 66% total return. For a long time, our all-time high was 3906. The STI broke through that, closed yesterday at 48.49. That's a high. It's now 24% higher than that all-time high for a long time that stayed with us for 17 years. And we're coming up to earnings season, which is going to be really important. 2/3 of the companies will report their FY results in the next 5-6 weeks. All the revisions by the research analysts in the past have been on the earnings rather than the valuations. So now it's time to start putting a little bit of that valuation premium back into the market and also seeing what's happened in the large caps, what's happened in the Sing dollar, all these assets extending to the SMIDs, the small and mid-cap segment of our market. So that's just setting, I guess, a little bit of a quick stage on why we're doing what we're doing.
Thank you, Jeff. So it's great to hear that Singapore right now is on such a strong standing in the global world. And the MAS has also introduced new initiatives to boost Singapore's equity market. And one of the key initiatives that we would like to highlight today is the $5 billion Equity Market Development Program, or EQDP for short. So for those who are not familiar with this program, This program is designed to enhance our asset management and research ecosystem, and it is aimed at, it has a goal of increasing investor interest in Singapore equities. And under this program, the Monetary Authority of Singapore, MAS, will invest in strategies managed by Singapore-based asset managers who have a strong focus on Singapore-listed companies. And Lion Global Investors happens to be one of them. So my next question is for Kenneth. What are MAS expectations of EQDP recipients like Lion Global Investors, and how does LGI plan to deploy the capital under this program?
Well, first of all, thank you for inviting us to be on this panel and to share the very interesting Singapore story to all of us here. Just a quick background on Lion Global. We are one of the fund managers who have been awarded by MAS to support the valuation re-rating and discovery of the small mid-cap space. We've been doing this actually for the past 10 to 15 years. We're specialists in the small mid-caps. And in terms of our funds, we have our flagship Singapore Trust Fund, that has delivered actually a very respectable performance over its 10-year history, and in particular, the past 2 years. Okay, so with that backdrop, I'd like to share with you that there are actually two stories in the Singapore market today. Okay, so the first of which is what's going to happen to the small mid-cap space with the government initiatives supporting that, okay? And I think we know that there is some impetus to revive this space. And the short answer to that is that we expect that, the past 10 years, we've seen very little interest and research into this space. And so the valuations have actually come off quite a lot, even compared to our regional peers. So what's going to happen with this initiative, and it's a collective initiative from whole of government, including SGX, MAS, and so on and so forth, all market participants, really is to look for the gems in this small mid-cap space. And what we've discovered is that because of the past 10 to 15 years of very low growth, some of these small and medium enterprises, they have suffered for quite a fair bit, right? If they've survived this hardship, they are stronger, they would have gained market share from their competitors, and yet their valuations still remain very undiscovered. So we're seeing actually the quality improve over the past 10 years, and this is the opportunity for them to be discovered, and that's why we feel that there's a lot of potential for alpha generation in the small mid-cap space, and that's how we are deploying in our funds. Just to give you an indication, we have 40% of exposure of our funds to the small mid-cap space because we find that conviction. In the past, where we didn't find this opportunity set, we were only between 10 to 20%. So you can see right now we are very convinced about this. Now I want to share with you the larger story of Singapore, because that's probably even more important to the development of the small mid-cap space, but it's lesser known, okay? And that is, if you notice that the STI index has finally, after 17 years, made new highs. Now this is very important because for any small mid-cap market to do well, you need the large cap market to do well first. So for instance, if you want the Russell in the US to do well, you need the S&P to do well. And the reason for that is small mid-cap markets in every jurisdiction tend to be the domain of domestic investors, but the large cap is the domain of international investors. So what happens when the large cap goes up is that it creates enough liquidity for the domestic investors to take profit from their positions in the large caps to then invest in the small mid caps, and it creates this virtuous liquidity waterfall. So to answer your question on what's the implication to the small mid cap space, we're in a very privileged position now where we have that liquidity waterfall cycle beginning to start from the large caps, and at the same time the MAS is also giving the boost directly to the small mid-cap space. So thereby kick-starting and catalyzing this virtuous cycle. So that's why I feel we should also know both sides of the story. We get a lot of questions, is this initiative sustainable or not? And the answer is, if you look at how the large caps are going, and I'll probably explain why a bit later on, that actually gives more added impetus for the virtuous cycle to take off. Yeah.
Thank you, Kenneth. So you mentioned that there are plenty of opportunities in the small and mid-cap space, but on a broader picture, broadly speaking, do you see any opportunities that Singapore offers that investors may not find in other markets?
Yeah, that's a great question because I was just about to explain really what's happening. And this is actually when it comes to the larger story, which is the large cap. Okay, what is the story that's driving the large caps now after 17 years of going nowhere, after 17 years of being known as a dividend but ex-growth market? We are now seeing that actually in the broader Singapore market is now a growth. And really, we have to look in terms of long-term cycles, okay? I think this is the decade where you look geopolitically, we are moving away from globalization to deglobalization and multipolarization. And the short answer to why the large caps in Singapore are now starting to outperform is because Singapore as a safe haven is now seen as a net beneficiary of geopolitical uncertainty. Because of our role as a safe haven, we are seeing, especially in the financial sector, more flows of funds coming to Singapore, right, because of all this geopolitical uncertainty. And that is also the reason why, if you notice at our stage right behind us, we have also launched the Gold Fund, our Gold Fund. And the reason is that it's a similar play, right? Gold is a reflection of geopolitical uncertainty, and that has done well. And the way we look at the Singapore market, we should see it as liquid gold. In other words, there's physical gold, right, that central banks are interested in collecting. And then there's liquid gold, and that's our Singapore equity market, which plays into the geopolitical theme, but also gives you that dividend yield, right? So you have these two factors occurring. Now, moving forward, as long as you feel that geopolitical uncertainty is going to continue, and it's quite likely that this decade it will continue, even with any change in president in the US. It is a clash of nations, right? So geopolitical uncertainty is likely to continue, and that is the main driver for why the larger story of Singapore in the large caps is going to potentially have a lot of tailwinds, and that fuels potentially the longevity for the small mid caps to also continue.
Thank you, Kenneth. Terence, so just now Kenneth mentioned about Singapore being a safe haven. So iFAST operates in Singapore, and it's one of the mid-cap companies here in Singapore. So my question for you is, iFAST is one of the potential beneficiaries of EQDP-backed investments. So have you seen any increase in investor interest in iFAST over the past year? And how has the company benefited from all of these initiatives that have been introduced by MAS?
Hi, everyone. Thanks for joining us this morning. So, 𝐓𝐡𝐞 is a listed company in Singapore. I'm sure some of you might have heard of it. We are also part of the whole iFAST family. FSMOne is our brand here, and it's good to see so many faces, enjoying the investment education process this morning here. So, in terms of the EQDP, I think one of the observations we've had as a firm from the corporate side, right, is I think over the past, 8 or 9 months, our investor relations team has been really busy, right? So we have been fielding a lot of calls, meetings. I think a lot of fund managers are starting to want to find out what we do, where we operate, how we do business, how we make money, and so on. So I think definitely there's been an increase in interest. I think earlier we heard this thing about trading liquidity and how some of these changes are attracting new forms of liquidity to the market, right? So it's not just $5 billion that goes into the Singapore stock markets, but it's also the other forms of capital that come in, right? Because they also want to participate in this increasingly liquid marketplace. And I think if you look at our, for AIY, right, that's our stock ticker on the exchange, I think our liquidity was up quite a bit in 2025, right? So approximately 150% higher trading volumes, right, on our stock, right? And of course, as a company that sees higher and higher liquidity, I think that's also of interest to portfolio managers, fund managers that haven't been able to participate, right? Because when they see the liquidity, they know that this is something, right, it's easier to buy, easier to justify in a portfolio. If they like the story, they find the liquidity is there, right? It gels, right, to making that investment. But probably I just also want to share that I mentioned we are actually a wealth management platform, right? We are Singapore headquartered. We have businesses in a number of countries like Singapore, not just in Singapore, but also in Hong Kong, in Malaysia, in China, and we also have a digital bank in the UK. But actually, Singapore is still our home market. We have over 70% of our assets under administration here. And I think when the Singapore market does well, right, that's something that we benefit from as well, because we are one of 11 retail brokers in Singapore, right? I think this year I can really see the turnout at this event is a lot stronger, right? I think it tells you that the interest in Singapore investments as a whole is really quite strong. And I think that really sets the ground for a lot of future potential for the business.
Yes, indeed. Singapore equities, as I mentioned just now, have performed really well last year. And this seems to suggest that EQDP has succeeded in deepening investor interest into Singapore equities. But I think a key question on many of your minds right now is, is this momentum sustainable? So Terence, I'd like to get your thoughts on this. And as a follow-up, Jeff, could you also share, what makes the EQDP different from previous attempts by SGX, by MAS at boosting Singapore's equity market?
Yeah, we don't like to speculate on how much momentum can carry on, but I mean, I'm a fundamentals person, right? So if I look at the Singapore stock market, and I think the PE on the STI is something like 14.8, 14.9 times, 15, yeah, okay. And we're looking at markets around the world. I mean, when I used to look at Singapore stocks, Singapore was a 16, 17, 18 time PE market, right? So we are not even expensive on that basis. And, the US market is what, 28, right? So it's almost double the valuation. So I do think Singapore equities, probably we're just getting started, we hope.
It is just getting started. And some progress so far. First half and second half of last year, if I look at let's say close to 250 companies that we would call small to mid cap, that is, they have a market value between 100 million Sing and 10 billion Sing. You look at those 250 stocks collectively, their turnover, or that turnover of that group, it went from around $365 million a day in the first half up to $465 million a day in the second half. Plus, we actually had some IPOs in the second half of last year, which increased the turnover of that group to above $500 million a day. So that's pretty important, because those 250 stocks, while they're only about 30% of market cap, they're actually 40% of the number of stocks. So, as I said, 30% of market cap. So well done for Lion Global for increasing that weightage to 40% as well, because the group are in play. If you look at the performances, they were quite varied, and the stronger performers also had the macro tailwinds, whether it's materials and resources, whether it's industrials, whether it's technology. And that also followed institutional flows as well. So you take those, let's say those REITs out of the 250, so you're just looking at the companies, and your net institutional flows rotated from outflows in the first half of 150 million Sing into inflows of close to 830 million Sing in the second half. Now, the increase in liquidity, the increase in institutional performance also lifted valuations. So those 250 stocks had a median price to book at 0.75 at the end of 2024, moved up to 0.77 at the end of the first half of last year, and then finished exactly at 1.0, which also means, okay, half an hour above book value and half below. So still much work to do. When you look at the flows, they're also following ROE, and iFAST has a very strong ROE, so that's one reason why it's also on the leaderboard for attracting net institutional inflows. So much more to do in terms of GEMS research. Beansprout's going to be talking soon, who also has been contributing to that. We had 300 reports issued in the second half of last year, including 100 initiations. This is all important, because what you want to see is the companies going back to you to actually tap for more funds as well, in terms of placements, crystallising those higher valuations and re-engaging the market. So I think this year is going to be a banner year. We're looking to empower the companies to unlock their value, to basically build their capabilities, increase their communication, and also build their community awareness. So you're going to have a lot of great things to work with. Transformation is a team sport. I guess that's what makes this different this time. This is a whole of market, whole of government, whole of Singapore approach.
That's great. And Jeff, just to pick up on what you said about, you mentioned that there is a pickup in the number of IPOs towards the end of last year or even the whole of last year. So do you see this momentum carrying into 2026? Yeah,
it is. We have a pipeline around 20 IPOs for this year. The momentum is there and the investors are embracing them. It's providing more choices and we need to do that. You can read, a number of research analysts have put out some pretty ambitious targets for the STI. You've seen the banks, you've seen Singtel carry the STI last year with its 54% gain. The banks have increased their presence from 39% at the end of 2019 up to 54% at the end of 2024. Back down to 52% now. We need new players in the STI to carry us forward. We need new investment flows. We need new companies. This is going to be critical.
Great. So we've talked about the favorable macroeconomic environment supporting Singapore equities as well as the policies that are in place. But beyond all of this policy support and beyond macroeconomic conditions, I think the sustainability of Singapore's equity market will also depend on how companies position themselves to investors to attract capital. So my next question is for Terence. Terence, from a corporate perspective, how can companies listed in Singapore make themselves more attractive to investors, both locally and globally? So we've seen iFAST stock cross the $10 mark this week. So what's the secret?
Okay, so actually this is a pretty simple question to answer, right? So, I mean, we all want to invest in something that makes money. You want to invest in a stock because it can make money over time and it can continue to grow its earnings, right? So I think what companies need to do is really to tell their investors out there how they're making money, how they intend to make more money over time, and why they're doing a pretty good job at what they're doing, right? So I think it's essentially just that, right? And I think for us, we actually put out certain expectations that we have for the business. I think we're one of the rare companies in Singapore that actually talks about the future in that way, and actually pinning down certain targets, right, that we're trying to achieve. Right, so that at least we can share that vision with shareholders. And as a shareholder, when you look at it, you can then measure the company, measure management, and measure how your investment is doing. I think in essence, that's what it really is. But I probably, just one or two other things, like in terms of governance as well. Like when you look at a company you want to invest in, right, even if they make good money, but they're not sharing it with you as a shareholder, right, I think then there becomes a governance problem, right? So I think it's also good to inspect and understand how companies do this because like for us at iFAST, and I think a lot of my colleagues are here today, right? We are all shareholders in the company, right? So we are all pretty pleased with the performance of the stock, right? So we all have skin in the game and we all want the company to do well together. So as we set out those targets, everyone is incentivized, no conflicts of interest there, all working towards that common goal. So I think just a couple of things just from the corporate perspective.
Thank you very much, Terence. So we are coming to the end of our panel discussion, but to wrap up our discussion, can I get you to share your views on the Singapore equity market, your outlook for the year ahead?
Yeah, thank you. I think just to wrap up, I'd just like to just follow on from some of the topics that were raised by the speakers. I think that the key takeaway, I think, is that we will continually be surprised by what could happen in the Singapore market this year. Already the past year, in fact 2 years, it has been going to do. It's been doing well. I think moving forward to this year, that could also continue to surprise. And I'd like to leave you with two big ideas, okay, that I observe. I think first is a global recognition that the Singapore market is starting to outperform the US. As you know, many of us are now very familiar with the US. It has all the technology stocks, and there's quite a lot of allocation to the US. But now I think this is the year where global funds will start recognizing Singapore's outperformance, and that can drive continued liquidity into that. Now, secondly, when it comes to the depth of the Singapore market, we talk about IPOs and all that. I think that could also potentially surprise us, not just next year, but over the next 2-3 years. And let me explain why. if you look at the role of Singapore in the world today, it has moved from being a regional safe haven to a global safe haven, right? I think we are the leader in the Asian time zone. And of course, you have New York, and you also have Switzerland in Europe, right? So you have a safe haven in every 8-hour time zone. That creates scarcity. And where there is scarcity, valuation multiples can go up. If you think about AI and the scarcity of AI, that's why you have valuation multiples, right? So when we think about valuation multiples and we look at the history of Singapore, we have to put into context that the scarcity factor is now increased. And so the history of the valuation metric might be revalued up. Okay, so that's number one. Number two, what Singapore offers as a safe haven is actually a platform for companies to operate cross-border in a multipolar world. So the finance companies, our banks and even iFAST, they have benefited from the wealth flows, and there's a demonstration of that, right? But moving forward, could there be other sectors and new technology sectors that would benefit from our safe haven status? And I would propose two sectors, one of which is AI, which is a very geopolitically contested area, where the data is stored, where the algorithm operates, right? Governments are very interested in controlling these things, right? So we could potentially see a plethora of AI companies, potentially new projects that have cross-border applications, and they need to probably come to a safe haven like Singapore to operate such neutral cross-border applications. Very similar to other applications like even anything to do with human data, biotechnology, genome. Potentially, we could even see that in the next 5 to 10 years, and that can build up the number of stocks and the verticals in the Singapore market to revive it back to what it used to be probably a decade or two ago. So I think, in a nutshell, I believe 2026 is a continuation of the surprise that the Singapore market can offer, and I encourage all of you to consider looking at your global asset allocation, right? To consider Singapore as one of your key global asset allocations. Thank you.
With that, we've come to the end of our panel discussion for today. Thank you all for your attention, and thank you to my panelists.